Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Thank you for joining us this 18th of December 2014. As always, lots happening in the markets this morning. We have futures, big risk on trade this morning, higher by 26.5 points this morning at 2034.5. Again, 2034.5, higher by 26 and a quarter points. We have crude oil higher by $1.23 at $58 and a penny. We have gold higher also this morning by $8.60, over the 1200 mark that we were discussing yesterday all day. Currently at $1,203.10, and we have the 10-year at 2.202. Recall yesterday we hit around 2.013 levels yesterday. 30-year yield at 2.797. The dollar is higher as well this morning. The DXY is at 89.357. A rather impressive last few hours rally in the dollar, higher by 0.214. So with the futures being so high, rather impressive finish to the trading day yesterday. We'll get into that, and certainly a risk on trade this morning. And then we'll have, in just a moment or two, we'll have Milton's feel on and technical analysis what all this could mean technically as you're looking for at the markets. So yesterday, for most of the day, we did have a risk on trade for most of the first half of trading. Post about 11 o'clock, volume really died down, which is not uncommon as the market participants were waiting for the FOMC announcements and press conference. And really, post FOMC festivities, if you will, really rallied rather strong into the close. The S&P 500 finished higher by 2.04% at 2012.89. We had the Dow Jones Industrial Average higher by 1.69% at 17,356.87. We had the Nasdaq higher by 2%, 2.12% at 4644.31. So clearly a strong finish. We have a strong open this morning. Let's just go through any of the geopolitical and macroeconomic news that's making news this morning. Certainly, certainly eyes are on Russia. Still, not even with respect to Russia-Ukraine situation. That's more or less the attention has not fallen to the wayside here, but certainly not as important as the Russian ruble. There's various information coming out, commentary on the Russian ruble and the Russian economy as a whole, and what effect that will have on the if in fact it will have an effect on global economy. Just some things that's coming through this morning, and then we'll get right into technical analysis. So Baltic Dry Index continues to fall here, folks, by 1.6% to 814 points. It's been quite a precipitous drop here over the last few weeks here. Initial jobless claims for December, we had numbers come in this morning at 289,000 versus the 295,000 prior, revised from 294 to 295,000. Continuing claims, we had 2.37 million versus the 2.43 million estimated. Prior was revised down slightly to 2.51 million. We are awaiting a 9:45 PMI service flash. We are also awaiting the Philadelphia Fed survey. 10 o'clock is the leading economic indicators at 10 o'clock, and at the rear of our presentation, you have a list of the leading economic indicators, always there in every presentation. We like to look at those constantly as more information is coming out on a daily basis. Really gives you a really nice indication of perhaps where economists are feeling the economy is going to. EIA natural gas report at 10:30. We also have the 3, 6-month, 2, 5, 7-year note auction results at 11. We have the 5-year Treasury inflation protection auction results this afternoon, late morning, excuse me, and Fed balance sheet and money supply at 4:30. Milton, we had a very, very strong rally into the close yesterday. We talked about specific levels in whether it's oil, whether it's the ES. We looked at the 2000 in the ES. Oil, certainly that 55 held. What's your take going into this morning? Did we see this capitulation? Did we see this post FOMC type rally? What's your thought on that?
Who really knows at this point? The market expected something. They, in a way, got it, because I don't think I've spoken to one person who really understood exactly what the Fed was trying to say yesterday, when in all reality the Fed is supposed to put out, understanding and comments that are, clear and, concise. I don't think I've spoken to one person who clearly understood exactly what happened. So I think in this way, I think it's just it's a hurrah, because no one can think, they mentioned, they took away considerable time, but they still mentioned it in the statement. They just changed it with patient, but a few lines down the road, they still put that considerable time in there. So it's like, what really is going on here? What really are they trying to say? It's, many people are saying, well, Janet Yellen was hawkish, but then others are saying, well, she was so dovish that, no one expected it. So in all reality, I don't think anyone really understands what is really going on. They're just following the markets, and the market came in. We mentioned the 2000 number as the number that we wanted to see. It came into that number, hit it, broke it. A little too much, too fast on the downside as well. Now we're back up, 75, 80 handles in a day and a half. It's a market where, it's a casino basically. I've been doing this for 15 plus years, and I've never seen, except in 2007 and 8, a market that is so volatile on simple words spoken by 2 or 3 or 4 people. That to me is not a market that I am clearly a fan of. At this point, you trade what you trade, you position what you believe is right. If it works, great, but in my opinion, half the people that I listen to, half the people that I talk to have no idea what's going on. They're just continually playing what the computers are trying to do here, or what people are trying to do. I personally, as a technical person, a technical trader, and someone who's been around for 10 plus years, it's not an environment where I believe it's a free market. I think it's being manipulated by outside, talking heads and outside people. So what I say always is, do your due diligence, do your work. Clearly, no one knows what is really going on in this market. To have these such volatile moves during Christmas when half the people are gone, it's just, who really knows. Technically, let me just stop that jibber jab. I'm going to go into the technicals real quick. Sure. We've mentioned the 2000 number. They're going to try to fight for that number. 2000 to the downside was the bear victory. 2000 to the upside with that volume was a bull's victory. And what happened yesterday? We had that volume. We had that 2000 break to the upside. Clearly the bulls won. Clearly it's showing this morning with a risk-on type move. It's I don't know. I don't even know what to say anymore. But clearly you're having these moves where the volatility is insane. 20, 30, 40, 50, 60, 70, 100 handle reversals during the days. Be careful out there. Trade. Stay on top of all your trades. Don't let things just run amok. I can't even speak at times because I'm just like it's shocking what's the volatility in this market, especially in December. So 2035 to the upside resistance. That's the number that we mentioned a whole lot 2, 3, 4 weeks ago. The number that needed to be broken to the downside. That now becomes resistance. 2035 plus or minus a couple here or there. That's the resistance number. Watching that to the upside this morning. Support around the 2010, 2015. So you'd have a 20 handle range again. Watching both levels. You're going to start, in my opinion, slowly starting to see the volume dissipate going into the rest of the weekend to the beginning of next week. Unless something, extraordinary happens, I think the volume is going to slowly, every day start to go away, and you're going to have, you back to the normality of a December trading. ES, again, 2035 upside, 2015, 2010 downside support. Let me jump on oil real quick. 55's the number, everyone. We've been mentioning it for days. It's trading on that number. It bounced off that number yesterday to highs. Hit a high this morning at 59.04. It broke the downtrend. So as of now, unless it makes a new low of the 53.60, the downtrend will be broken. So we're going to see the how it trades off of this, how it trades off the base trying to be formed here. Watching the 55 number again, keeping an eye if it goes and tests it again or it just continues to the upside. We're watching it. It's only up 48 cents this morning. It was up over a couple of dollars earlier pre-market. Seems like it's coming in a little bit. We're going to keep an eye on it and see what's going on regarding oil. So that is something to keep an eye on. A lot of people are trying to catch this oil trade, and many people are asking this morning, what's the next step? Ideally, oil bounced. Even though oil hasn't really bounced, oil names have bounced nicely. 10, 15% on some names across the board. What that coincides with oil, it's to each own. But as of now, regarding oil and only oil, 55 downside, 59 to the upside, broad range. So keeping a close eye on that, and then if anything happens after that, we'll let you guys know. But oil is in a broad range right now. Simple headlines can move it. Trade if you dare, but always be tight on every trade, especially with the volatility we've been having lately in this market. VIX, we mentioned the 23 upside resistances. It hit that level, broke a little above it. We mentioned how it went too far too fast. It almost doubled in the span of 5 days. It's clearly come into the 19 range. It will be lower again this morning. Our resistance, is between the 16 to 18 mark. Watching that as the support level, watching that as support, keeping an eye on those levels. If it could trade into those levels and bounce off it, okay. If not, the next level of support is that 12 to 14, which ideally could happen if the volume just starts to siege going into the holiday week next week. Lastly, gold. The 1,200 number, you guys have been hearing it. I'm sure you guys are sick and tired of me mentioning gold at 1,200, but that's the number. 1,200 is the magnet for now. Just like the ES was 2,000, that was the magnet. The magnet right now is at 1,200 on gold. Any volume move to the upper downside will continue that move. It's been, back and forth around the 1,200 range. So as of now, there is no clear move in gold until either side is broken with volume. That's the tech update. It's all I can say is be careful out there. A lot of people are asking questions on what really is going on, but I don't think anyone really understands what really is going on. No one, expected a move so vicious on what was not said yesterday and what was said yesterday. I don't think much has changed from the the mentality of a mid-2015 rate increase, but I guess a lot of people felt it was a more dovish tone than expected. George?
Correct. No, Milt, I think you bring up really good points with respect to a little bit of confusion in the markets with respect to how the FOMC made their statements, also how the market is interpreting all of this, and I think that's rather crucial here as we digest these market moves, and these are rather significant moves, as Milton said. When you're seeing, if we remember about 2 days ago, we really had this 100-point turnaround. Approximately 50 up, 50 down in the S&P 500 is rather rare, and when you see 80-point moves from 80-point moves in a couple of days in the SPX, I mean, it's rather significant. So I think that's something to keep in mind, and it's good that Milt brings it up. And when you are seeing a little bit of difference of opinion with respect to markets, when you are seeing difference of opinion in where the market should be going based on certain comments of the FOMC, you're going to continue to have some sense of volatility, and I think that's really important to note. And because there's a difference of opinion, because there's a difference of where folks think where FOMC should be doing, you're going to see this volatility stay within the market, at least for the foreseeable future. Now, going into the holidays, of course, next week is a shortened week, so to speak, and the following week is a shortened week. It really is a you're probably going to go. You will probably see a depreciation, a decrease in volume activity, but again, volatility still may stay. And I think that's really important. So, folks, let's tune back to what's happening in the overall markets here. Bear with us as we switch back. One moment here. Okay. Okay. So if we switch back to the presentation, a few things that are coming out that are making the rounds this morning, and that is the Swiss National Bank will cut interest rate to minus 0.25, and that's rather interesting. And we understand from the European nations that this risk of we're going to say there's a risk of deflation here, folks. And the phraseology that they've been using is decreased inflation pressure, or less inflation risk. Folks, that's the D word. That's deflation, and that's what central bankers. This is what really bankers want to avoid in general. We don't want deflation, folks, because that takes on a whole other connotation from a purely economic perspective. Also, word out there that several automakers halt Russian car sales due to the ruble, so one of the things that to keep in mind is when we talk about the currency fluctuations with ruble, it legitimately affects not just the FX markets with respect to larger players, but really does affect manufacturers. If you're importing, exporting, it affects. This is pure economic theory put into practice, and that's really the crux of this, and that's why seeing the Russian ruble collapse like that, it's a great, from a historical perspective, and from an education perspective, it's great to watch all this unfold and really put things into perspective. Those folks have an economic background, and it's really great. So just a brief recap of FOMC from yesterday. So the term of patient enter the lexicon of the FOMC. um, instead of considerable time. Now, it does lend to a little bit of confusion, as Milton said, and so there's a little bit of misunderstanding, if you will, from a perspective of what does a trader do from here. Clearly, the market reacted very positively to this. There is just some thought out there that if they remove considerable time completely, then it would be the markets would not respond well to that. That the markets would think that the intention was to raise rates, that the raising of rates would be imminent. Also, from the FOMC, no mention of global risks or Russia. Monetary, quote unquote, monetary policy will still be accommodative for a long time. And they mentioned slight undershooting of they want to undershoot the timing. It seems as though one of the consensuses that's coming out is they're watching this unemployment rate. They want to make sure that the unemployment rate is low enough, and it actually points to a little bit of average hourly rate and employment kicks up to a point that it does point to a little bit of inflationary pressure. That's what they're looking for. They're looking for that type of inflationary momentum there, that it does take out this unemployment numbers, a lot of slack in the economy here, so they want to take that out. Once that slack comes out of the economy, then you'll see this rise in inflation. That's what they're looking for. That's when they're going to and it seems like they're okay if they're behind schedule a little bit, but they do want to see a little bit of inflation coming into play here when they look at specifically employment. So, folks, let's take a peek at where we are on overseas from the U.S. in Asia here. In Asia, we have the Nikkei higher by 2.31%, certainly on the heels of the U.S. markets. Hang Seng higher by 1.09%, and the Shanghai index is lower by 0.11%. In Europe, we're higher across the board. The FTSE higher by 1.37%, CAC in Paris higher by 2.81%, DAX in Germany higher by 2.18%, IBEX in Spain higher by 2.77%. So certainly, positive tone to the markets, clear across the globe. For oil, this is what we always have up. These are the ETFs that we're monitoring with respect to oil, and oil currently higher by 50 cents right now at 57.29. We have crude, not to the low of the day, but certainly not as high as we were very early morning this morning at 58 and just about 59. So continuing to monitor this. So that's crude oil. In the distillates, we have gasoline higher by 0.0242 at 1.5904. Natural gas higher by 0.065 at 3.767. Heating oil higher by 0.0126. Gold higher by $8.50 dollars at 1,203.0. So again, we mentioned that 1,200 range level, as Milton said, does tend to be a magnet here. Silver higher by 13 cents at $16.06.5, and platinum at $1,205.30, higher by $5.80. Commodity, let's see, I'm sorry, cocoa higher by $44 at $29.59. on the rates, on the rate side, let's and then right after that we'll jump into specific stocks that are making rounds this morning. 5-year at 1.667. That's rather impressive increase from what we were yesterday at 1.52 on the 5-year. Increase on the yield in the 10-year at 2.211, and an increase on the 30-year yield above that 2.8 mark at 2.809. So very interesting. The DXY at 89.307. So we'll continue to watch that and that impact on both oil and gold on that. Let's get into specific stocks here. LTS, Ladenburg Thalmann Financial Service Incorporated. We had a director purchase 17,000 shares at $3.97. That's TLS. Be waiting on that for a moment. Currently at, sorry folks, slight delay here in the markets. Yeah, at $3.95 here. Sorry, folks, just having a little bit of difficulty on the chart side, so bear with us. Our RVLT will just go through these. LED lamps offered at Staples. Currently, the stock is at $1.40. ALU at $3.54, and is with Nokia set to be in merger talks, rumbling on desks. That's Alcatel-Lucent. Excuse me, and NOK. Also, AINV, Apollo Investment, president purchases 10,000 shares at $7.34. MET will be in the news. Treasury Secretary Liu presides over a meeting on MET and to see whether it is systematically important. So this is a little bit of a flashback to 2008, 2009 type conversation. And MetLife currently at $52.86. Let's go through these insider purchases. Actually, let's focus. Let's do the syndicates quickly, just in the AM here. We're getting, and if you see here, this is the leading indicators that's coming out at 10 o'clock. So we always like to keep that in the PowerPoint presentation here, just for information purposes. We're not only are we fundamental, we're also technical. So all that comes into the mix. In the syndicates, BBRG, we have 3.57 million shares at $14 for a tender offer. At currently at 30, not indicating anything yet. CASH, Meta Financial Group, sells 26 million of common stock at the market. So we'll see how that corresponds into the open here. PBSK to sell up to just about 130,000 shares of common stock. RGP to sell 1 billion of common units. We're not seeing anything yet in Regency Energy Partners. We'll see how that works out. And Vanaxis, we have APPY selling 50 million shares of common stock. So, folks, let's run through some of the larger positions here being taken on. We have AGIO, rather impressive here at currently in pre-market $119. A $25 million purchase here. We also have SGEN. We have a $91 million purchase by Baker Felix, who's the director, 10% owner. That's rather impressive. Currently $33 in SGEN. Let's continue here. We have NAV. Wow, we have some rather impressive purchases here. Carl Icahn, 10% owner, purchases 1.9 million at $29.90. Stock is at $31.87. Also, Carl Icahn purchases HTZ Hertz for 56 million. Purchased $22.22. AMH. At $17 million purchase director, not indicating anything yet this morning. Also, ETP Energy, just it's a smaller one, but we like to bring it up. We like, especially in these energy stocks that have been under pressure as of late. As aggregate, it's nice to see them come in here with directors, CEOs, CFOs really come in and to show some support here. We like to see that. Yum Brands, actually, this is, let's continue here. AIRT, we have, let's see here, 10% owner purchasing 2.6 million shares worth, $2.6 worth $27.25. We have rather large purchases here, folks, which is very interesting. So currently, let's see, ISIG, $4.5 million purchase, not indicating anything yet for ISIG NAV. We have also another purchase here. We've discussed that. So, folks, those are the larger purchases in that we see overnight and into this morning. Let's take a quick check on ES, higher by 27 in the S&P futures this morning, which is really at the high of the pre-market here, folks, as we're getting ready for the open in just a few seconds here. And we have crude oil up the same, about 51 cents at $57.29. And really watching those yields, folks, the 5, 10, and 30-year yield. Want to see where the rest of trading takes us with respect to that particular yield curve that we've been discussing over the last few days. So, folks, thank you for joining us on Unusual Activity, powered by Financial Juice, with George Avedon and Milton Marmonides. We wish you a great day and good hunting.